Welcome back to Galaxy Grid. I'm Alex Thorne, head of firm-wide research at Galaxy. I'm joined by Lucas Chayan, Thaddeus Pinikavich, and Zach Picorni. Welcome, gentlemen.
Morning, GM. Thanks for having us.
We've got a great episode for you this week. We're going to talk about the Czech Central Bank has announced a purchase of 1 million of Bitcoin, stablecoins, and tokenized deposits, part of a test to learn about the technology. A watershed moment. This is the first time a central bank has ever purchased Bitcoin outright, but was it really just a test? We'll get into it. We'll also talk about Uniswap turning on their fee switch, or proposing to turn on their fee switch. After literally years, Uniswap Labs and the foundation have put forth a governance proposal to activate the mythical Uniswap Fee Switch, which would make Uniswap a revenue-generating protocol. Is that a good thing, though? And China accuses the United States of stealing 127,000 Bitcoin. Several weeks ago, an indictment was unsealed showing the U.S. seized 127K BTC from the Prince Group, a Cambodian crime syndicate. Now China, though, is saying the U.S. actually stole it from them. What do we know? And Yield Basis, the Curve founder, has released a new protocol to help you earn a little bit more on your Bitcoin DeFi positions. We'll get into all of that and a bit more. We'll talk about our views and things we're watching for the week ahead. Before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the show notes, and note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Gentlemen, let's hop right into it. The Czech Central Bank has purchased Bitcoin. Bloomberg says that although it was Bitcoin, up to $1 million of Bitcoin, stablecoins, and tokenized deposits, Bloomberg reported it is mostly Bitcoin. They're claiming this is a test so they can practice using the technology. I think you could do that with just a few sats. I don't know why you would need to buy $1 million of Bitcoin. $1 million. What's the initial take on this? I thought this was actually pretty bullish.
Well, they're not the first. They're not the first country to really step up their Bitcoin holdings. I mean, El Salvador is holding about 600 million at this point. They're buying a Bitcoin a day. A little bit different than a Euro area country, but it's good to see more adoption. I mean, we've seen gold really rip this year as people are moving away from the greenback, and it's just people farther up the curve going for digital gold.
Well, you're right, though. Countries, sovereign wealth funds, Bhutan, through venture and other things, Singapore, obviously the El Salvador sovereign wealth fund own Bitcoin. The United States holds Bitcoin. China holds Bitcoin. I think there's a Baltic state perhaps that holds Bitcoin, but no central bank that I'm aware of purchased Bitcoin, which I think, Satoshi said very famously that, the problem with fiat currency is that central banks have to be trusted not to debase it, and history is full of breaches of that trust. It seems like kind of a final frontier for any central bank to buy Bitcoin. The CNB, which is the Czech National Bank, which is their central bank, is claiming that this is really not part of their foreign reserves. It is purely a test. They seem to be backtracking pretty hard or alerting the world. No. We didn't buy this to hold it in our reserves. We didn't buy it. We just bought it, but not really bought it.
Big test.
Does this stand out?
Well, I mean, isn't that even more bullish a little bit if they're exploring it to check out the underlying technology, because that's how you kind of really pill people on this type of stuff. They're like, oh, great. Actually, we can self-custody this. We can make sure that the amount that we're holding and control it completely. And maybe it opens the door for them to explore other options in terms of what they can do with Bitcoin or other. The most optimistic case would be, other types of blockchain technologies like general purpose smart contract chains and things like that.
Must be fair.
Presumably that's what the stables are on, right? They can practice the smart contract blockchains with whatever stable they've got.
Let's be fair, governments probably do need to come up the curve. I remember the marshals were castigated by the government for a while back as they were keeping their cryptocurrency holdings on an Excel spreadsheet that didn't really match what they actually had. So it takes a little while to get used to digital assets.
I mean, it comes at a good time given the broader market context, right? I mean, as Bitcoin is selling off, people are concerned it lost the 50-week moving average, which has been a bad omen in the past. But announcements like this signal, all right, well, maybe this time is different. I'm not saying in terms of price action, but I'm just saying in terms of the type of underlying activity and developments in adoption that you want to see during a period of downward trending markets.
So in January, I don't know if this person is the Jay Powell of the CNB or just a governor, but CNB governor, I'm going to butcher this name, Ales Michi, floated the idea that the Czech central bank would actually consider including Bitcoin in its reserves with a weighting of up to 5%. And at the time, this is back in January of 2025, European Central Bank President Christine Lagarde panned the idea, saying at a press conference that she was confident that Bitcoin will not enter the reserves of any central banks of the General Council, of which the CNB is part, which is sort of, I guess, a council of the central banks in Europe. So they did go ahead and buy. So in January, they were saying, we're going to buy it for our reserves. But now they've bought it, but they said, no, it's not for our reserves. It does seem like they're kind of telling Christine Lagarde what she wants to hear while simultaneously going forward with what they had previously said. That seems bullish, that they are sort of going against the ECB and buying some Bitcoin. I don't know. It is the first time in history, though. Like it's hard. Let me because I want to get to your point, Lucas, about where this story fits in the market narrative. But it is a step in a direction. It's sort of like, at first, Bitcoin is hated by central banks, or said to be fake, a fraud, not a real thing. Then you get later, eventually it's acknowledged. You get Jay Powell saying that, like gold, it's just virtual and digital, which is a quote that he said in front of Congress. So acknowledging it, hated, then acknowledged, now held for testing purposes, right? It seems like a step forward. Like, I would say it doesn't take a lot of imagination to guess what the next step might be after the holding for testing purposes.
I mean, this is literally just the instantiation of the first they laugh at you, then they fight you, then they join you meme. Like, we're kind of seeing it play out in real life here.
It's finally playing out maybe at the central bank level, which I think is sort of the final boss here for Bitcoin adoption. Let's talk about the market, Lucas, to your point, because, if this headline had come out, I don't know, in some prior era, certainly in 17 or 21, we'd be looking at a giant green candle, right? A central bank purchase Bitcoin. I mean, it is. I just have to revel, although the candle did not materialize. In fact, it's been the exact opposite for several weeks now on BTC USD. This really is like a full circle type of moment. Like, I would love to ask Satoshi their opinion on this story, because it's actually mind-boggling, considering where Bitcoin started and sort of what Satoshi's vision for, I hate to say that, Satoshi's vision, what Satoshi's view of Bitcoin's purpose was. But instead, we haven't gotten green candles. We face a very squishy and downright negative market. I think the fear and greed index is 10, which is like the lowest it's been in forever. Why can't this help the market sentiment? Why isn't it?
I mean, I think there's probably, I think a big thing we're seeing is there's some exhaustion in the market, right? We have had, and we've talked about this on previous episodes, like, we have had so much good news at this point that there is a lag between the time that good news is announced and it actually materializes in terms of implementation and adoption. And I think that's part of the process that we're going through right now. I think on the other side, there's other things going on that seem a little troublesome for the market, right? Like, if you look at stablecoin market cap, we just saw it decline for the first time, I think, since like 2023. There's consistent ETF outflows, Google trends. Like, if you look at searches for Bitcoin and crypto, they're at very lows. If you look at the altcoin complex, others is 10% higher than it was in December 2023, despite Bitcoin being up multiples. So it seems like there's a broader market adjustment going on, and there's transitioning from weak hands to strong hands, and that's taking time to play out. And we just have to hope that in the interim, that doesn't dampen enthusiasm for Bitcoin and crypto as an asset class as a whole.
I think we're just seeing like a good general kind of market flow here from participants. Like, you see flight to stables in times of like extreme uncertainty on chain, and then as things kind of pervasively get uncertain in the macro economy, you see flights from stables to more traditional yielding assets like T-bills and whatnot. So you generally see some outflows when you get like some macro downturns and some headwinds like we're facing in the economy right now. So I don't think that's crazy, but it is definitely a sign that people are a little skittish and need their capital elsewhere.
Yeah, I mean, I'm looking at the stablecoin market cap on DeFi Llama now. Like, Athena seems to be a pretty big contributor to the downtrend. It's down 36% over the last month, currently sitting at an 8 billion market cap. So that's close to like 4 billion in market cap just wiped off Athena, which people mostly use to essentially buy access to the basis trade. So like general yield compression and just like lack of activity on chain seems to be driving the majority of that. Like looking at Tether and USDC, like Tether is up 1.2% over the last month, USDC down slightly, like 1.5%. So like the centralized stable coins, I mean, at least the largest ones seem to be doing pretty well. PYUSD up 25.5% over the last month. So it's like people also use the stablecoin market cap going up as we were kind of cratering during the tariff tantrum earlier this year is like there's the same divergence we saw in November 2021. So I really question the amount of signal that's in like the stablecoin market cap now, because we have like actual financial instruments like USDE and then also like juxtaposed against centralized stablecoins that are being used by bigger players, institutionally minded people kind of growing in opposite directions. So I just question the stablecoin market cap as like any kind of cemented indicator.
All right, last point here on this story. You know, the central bank of the CNB, the Czech National Bank, their central bank, buying some Bitcoin, playing with some stable coins, you know, have fun with your Bitcoin and cryptos and all the other things you're playing with, is a direct quote from the current U.S. president. That's kind of what they're doing, they say. But the Fed isn't buying and playing with their Bitcoin. And instead, I think the bank, both central bank and commercial bank focus in the U.S. has been stable coins. A whole different story here, right? I mean, you do have the Treasury working on the strategic Bitcoin reserve, but I would peg that more at the sort of sovereign wealth level than the bank level. Is there going to be a big overlap between banks and Bitcoin, or were you looking more at a stablecoin future for the lending sector and the money creation sector, I should say?
I mean, I think we got a big future on the stablecoin sector with the Genius Act here. It's going to open up a whole bunch of regulated competition. I think some of the things we'll really see is a lot of capital flight from EM countries where their currencies are a bit unstable. The IMF shouted this out in their report ages ago that crypto essentially breaks capital controls in these countries. So I think places with weak regimes, we'll see a lot of flow into regulated U.S. stables, and I think we'll see a big uptick there when folks get essentially the stamp of approval, priority in bankruptcy proceedings. So I think that's going to be a huge rail. I mean, the dollar still remains dominant in global transaction settlement currency. I mean, there's things like the yuan picking up around kind of OPEC and like oil generating countries, but broadly the dollar is remain a huge trade factor, and I think it's going to be the real way that we get large adoption, and folks will eventually kind of see the light with Sailor and his gigantic stack of coins, and a few other countries like the Czech National Bank that chose to adopt it will be on the cutting edge there.
All right, is Sailor the new central bank? That's a good question for another day. Let's move on. The Uniswap Fee Switch, after years, there's a proposal now backed by the foundation and Uniswap Labs. There had been prior proposals that did not get the backing, but this is sort of that iconic governance switch. Like, I think the only one really that Uniswap governance can even activate has now been proposed by sort of the leading parties in the Uniswap ecosystem to turn this on and buy back Uni from it used to just be like Uniswap on ETH mainnet, but now there's Unichain and Uniswap deployments on other chains. Lucas, you sent a really good note to our clients and counterparties last week explaining this and wrote about it in the newsletter. What are they turning on? Who benefits and who maybe doesn't benefit?
Yeah, definitely. So in totality, there was like 8 recommendations in the proposal they put forth. But, I think the headline ones here that a lot of people are interested in is, yes, one, activation of the fee switch, which means they're going to use a portion of fees that previously went to LPs to buy Uniswap. And then they've also created basically a burn mechanism where once the amount of uni that's been acquired gets to certain levels, individuals can basically burn the uni once the fees that they've acquired get to certain levels, individuals can basically burn a certain amount of uni to take those fees in whatever coins they are. And then you would guess they would either accumulate them or sell them onto the market. The second one I think is big here is there's also a retroactive burn. They're proposing burning 100 million uni, which is about 10% of the supply, to account for Uniswap revenue that previously would have been used to burn uni. And then there's a bunch of other kind of like additional fee mechanisms that Uniswap is looking at implementing. So, they're looking at taking the sequencer on Unichain and using the revenues from that. They want to introduce this thing called a protocol fee discount auction, PFDA, that basically tries to kind of like internalize MEV that otherwise would have gone to like validators and use it instead for burning uni. And then I think the final big one here is they are proposing to basically roll up Uniswap Foundation into Uniswap Labs. And so, overall, I think it's a huge occasion. Like, it definitely opens up the floodgates for others to step in and take action. I don't think this was planned, but like immediately following the unification proposal coming forth, like Lido, DYDX, Magic Eden, they all announced buyback programs. So I would expect we see more of those coming out in the months ahead. And I was listening to kind of Hayden and the Uniswap team talk about it on a X stream that they had last week, and like you could just kind of sense the relief in their voices. Like, this has been a really long time coming, and this is something that they've invested an immense amount of resources in trying to figure out. So I think it's great. The final point I just want to make is like, by rolling the foundation into Uniswap Labs and getting rid of a prior fee that they had for using the Uniswap interface, they're basically removing kind of like a huge major conflict of interest where like Labs was basically competing with the protocol for revenue. And now all efforts can basically go towards kind of accruing token value.
It seems, I guess, to me, and I'm not that close a watcher here, but like you are taking revenue away from liquidity providers. That's a core change here, right? And I had thought that it was going to go to uni holders, I guess, in some kind of like periodic snapshot airdrop. It's a little different. I guess in a way, it goes to uni holders by destroying uni tokens. But is this going to reduce liquidity? I mean, if you're not getting paid as much, isn't it already like not that good a business to provide liquidity into a Uniswap pool? And now you're going to lower their revenue?
Yeah, I think the uni pools are paying something, on like 3 to 5%, depending on the asset. It's pretty rough already. I do think the uni, it's interesting if you think of it from like a kind of finance theory standpoint, that like uni is essentially saying, hey, we're mature enough, we don't need the funds going to the labs anymore to invest to really fund our development. Like, it's like, Coca-Cola issuing a dividend. They're not really breaking new barriers. The business is steady, and they're like, okay, it's time to give it back to investors. So in that way, I think it's interesting that they're kind of saying like, hey, like this is like, we're mature, it's time. I think the follow-ons are probably just that, though. Are they mature enough? Have they been battle tested enough, or are they just trying to follow on and make sure they keep up with the latest in vogue thing? I think that's a bit more likely. I think some of these other platforms are not quite ready there, and they should be properly using those funds to further their own development. But we'll see kind of what shakes out here in the market over the next couple of months.
Yeah, I mean, I think one thing that came out after the announcement was there's a lot of dubious like volume and trading activity that happens using Uniswap pools that kind of amplify what might be the real like actual economic of like real basically volume that's happening on the protocol. And so it's definitely going to be interesting to see like how volume metrics change on Uniswap going forward, because now, if you're an LP before, you could now there's part of fees that are going to a different party. So you can't really just swap back and forth on Uniswap with no penalty to yourself. And I think that's one thing. I think for the broader space, like this is really an important moment, because this is one of the biggest protocols coming out and saying, hey, we're moving towards this revenue generating mechanism. And like, if you're a protocol out there that it has some sort of business that is not successful and just has a token that has no claim on the business or no value accrual, like, you kind of have to look at yourself and say, like, why would people be interested in our token now that it's becoming increasingly standard for the token to accrue value? And Uniswap's not the first. We saw this with Hyperliquid. Pump.fun is doing it. I mean, there's a ton. I mean, Maker was kind of one of the first ones to approach this.
Yeah, and ever since they announced this buyback, I think this is part of a trend, right? Like Hyperliquid, Pump Fun, really big buyback and burn, or not, I guess maybe not buyback always, sometimes buyback, but in general, burn mechanics. I guess do we consider this a buyback and burn? I'm not really sure, but basically we do. Okay, we do. Well, and now, the title of your story in the newsletter was, you get a buyback, you get a buyback, everyone gets a buyback. Why is that? Why was that the title?
Because that's what we're seeing. How, people are saying like that. The teams, I guess, have decided that buybacks is the most immediate way in which they can use existing protocols and the mechanisms to return value to token holders. And like I said, we're seeing it happen across the whole space. Immediately following the announcement, DYDX, Magic Eden, Lido all come out and say, hey, we're implementing some sort of mechanisms. And that's going to be the standard going forward. But, I think Zach has some thoughts on this. Like, the other question, is that the best way to return value to token holders? Like, is buybacks the best way of doing that? And also for protocols themselves, like, are they now being forced to do that because other protocols are doing that, when in reality they should be allocating these funds towards growth initiatives and things like that?
Yeah, I mean, we predicted at the beginning of the year that this was going to be the year of like the DeFi dividend. Like, the handwriting was on the wall that at the beginning of this year everybody was going to start doing this, and I totally agree. When you're kind of sitting in the market as an early stage project and somebody like Uniswap announces a fee switch that could potentially buy back tens or hundreds of millions of dollars worth of the token a year, like whatever it might be, you're kind of pigeonholed into a position where it's like, I have to do this, even though it's totally imperfect for my circumstance. But I think what it comes down to is like, there's a fundamental disconnect between the token and the company that sits behind it. So the only real way to draw a connection between the two is to buy back the token, whether it's the best thing to do for the company or not. And I think that's a huge problem that the space is kind of coming to grips with, and it's being reflected in asset prices. Like, I think Uniswap was down near the FTX low price before this buyback was announced. Like, tokens, even of the best and most widely used protocols, have been in a very tough position. So like, making this announcement kind of gives you some near-term relief. But I think the real test of this model is probably going to play out over the next 6 to 8 months. And my intuition tells me that the buybacks are just not going to be enough, and we're going to have to pivot to something that's more substantial and actually fundamentally connects the value of the company and the product behind the token to the token itself.
Yeah, because I don't think Uni holds.
Like, Apple wouldn't be doing, Apple doesn't need to be doing a 90% buyback or using all of its revenue to give out dividends to make the company valuable.
I don't think Uni holders get any the third-party licensing fees either when they license out the tech to other folks.
They do have, I mean, like I said, they do have a lot of mechanisms though, where like they're going to be introducing all these hooks. So a lot more aggregator flow that comes through leads to burns and stuff. So I think what we're going to see is they basically said we're going to start with kind of like basically Ethereum V2 and V3 pools for the buybacks, because like we have the tech in place to do that. And then over time, we're going to kind of move out towards other chains where they're deployed, towards Unichain and things like that. So I also think there is room for adjustment here as they proceed. They are bypassing the traditional governance process with this proposal. So typically there's a request for comment period. They're skipping that, and they're just going to go straight to kind of a vote, a snapshot, and then vote. So I think it's possible like the initial stages of this are passed before the end of this year, which would be great. And the other point that I think is interesting here is like, there are a lot of competitive dynamics at place. Uniswap has been bleeding market share to other DEXs. There's a lot of DEXs that are competing better in terms of incentives. A lot of people look to Aerodrome that's doing that, which the day after Uniswap announced that they would be expanding to Ethereum layer 1. So people kind of view that as Aerodrome going for some of Uniswap market. And then there's just in terms of like better capital efficiency designs. So like projects like Fluid, which has gained a lot of market share because they allow you to basically like leverage some of your positions to LP. So I'll be interested to see what happens to Uniswap's market share after this. I'll be interested to see if this impacts Unichain at all, which, despite being the chain for the leading DEX AMM, sits outside of the top 10 in terms of like rolling 30-day volumes.
Very interesting. DeFi, go look at the DEX market share chart, I think, and you'll find that, I think we tweeted from the GLXY research handle on X. You'll find that it's good. It is a chart of constant market share disruption. So, and this isn't the latest one. This is just the latest change there. Let's move on. We have two more stories we want to cover. China, the People's Republic of China, the large nation, is accusing the United States of stealing 127,000 Bitcoin from them. This was a story you wrote about, Thad, several weeks ago at this point. In your version of the story, so what actually happened was the United States, I guess probably federal prosecutors, unveiled an unsealed indictment in which they pointed out that they had seized 127K BTC, but they said they got it from Chen Shi, the chairman of Cambodia's Prince Holding Group. Prosecutors accuse of running a vertically integrated criminal conglomerate that spanned online gambling, for forced labor compounds, and pig butchering investment scams. And you pointed out, Thaddeus, that the addresses in the indictment, the DOJ lists a series of wallets in which the Prince Group controlled, had maintained records of, this is the quote, had personally maintained records of the wallet addresses and seed phrases associated with the private keys for each. That is strange language. Because you also pointed out that that list of addresses matched one for one a list of addresses that had been published by the Distrust cybersecurity team that they had previously that they had identified as weak entropy wallets associated from a miner with a miner Lubian.com that itself had all of these coins stolen in 2020. So the naive interpretation was that the United States government seized coins from this criminal syndicate, the Prince Group, but that perhaps they had stolen them from Lubian years earlier, or they were the same entity as Lubian. It's not clear. Now China says, no, those were stolen from us. What in the world could be going on here, Thaddeus?
What a tangled web I weave here. Yeah, so it's really a question of what happened to this hack in 2020. So I think this is the biggest ever, private key hack in Bitcoin. 127,000 Bitcoin were stolen essentially right before the turn of the year 2021. So in article we wrote about, these are the coins that eventually, were owned by Chen and the Prince Group, and then subsequently moved to U.S. government wallets. The question comes in is what happened after the 2020 hack. So the coins didn't move for 3-4 years. And so we suspected essentially, maybe it's just a typical kind of, you launder a bunch of money. Where do you put it? It takes a little while. The Chinese, essentially, the Chinese National Computer Virus Emergency Response Center, which are the guys who put out this opinion piece, said that pause of time wasn't indicative of a actual hack or a money laundering operation. They said they would suspect anyone that actually exploited that much Bitcoin would go through the process of splitting it, obscuring the sources and trying to exit through some sort of rails. And they also pointed to the fact that Lubian, or the Lubian controlled wallets, spent a Bitcoin and a half afterwards sending op returns of essentially, please return the Bitcoin. We would love our Bitcoin back. It really depends. So that paints on that side, okay, yes, that could make sense. If Bitcoin sits around for a couple of years, essentially, they're accusing the U.S. of essentially cyber warfare of sorts against
So they're saying industry. Maybe the U.S. hacked Lubian.
Yes,
though,
that's
effectively what they're accusing.
Because this was an openly known.
Because we've now ended up with the coins is the idea.
Yeah, and it comes from the fact that this was
in the indictment. Right, it was a known exploit that would have affected these, so it could have been exploited. And the indictment doesn't say, we kicked a door down in the CEO of the Prince Group's house and seized his treasure. The indictment says that he just also maintained records of the private keys. So maybe the Prince Group CEO just also was like the Lubian CEO or was affiliated with Lubian, but the mere fact that he had private keys that, you know, now in 25 have no coins in them doesn't mean that he put, like, the language in the indictment is
It's a little strange.
vague.
I mean, the distrust cybersecurity guys are also in control of those private keys. That's how they identified those addresses, by running through the non-pseudo random key generation thing
That's how
themselves.
they proved that they
Exactly.
could be exploited.
So that's where it comes in. Is like, okay, did the U.S. government did a bunch of the spooks essentially, hit all these wallets and move them into the NSA's control, or was it a criminal Bitcoin laundering group that did it? That's where the contention is. I think kind of in the absence of
Right.
any real evidence here, it's a little bit of he said, she said, and you're not really going to get too many answers. I mean, maybe we'll see. Chen is still on the run. He's on the lam. He's on the OFAC list. So maybe if he gets run up, we'll get some answers. But I think for now, it's a bit of a matter of opinion on where you think this comes from and who did it.
He said, she said at the nation state level. Pretty fascinating, and a lot of money at stake. Billions of dollars. So, is this because I don't think is the Chinese cybersecurity division, I'm going to call them, are they saying they didn't say that these belong in the national coffers of the PRC?
No, just that they were
They-
pointing the finger at the U.S., saying, "Hey, this is likely them." In our
Although they could maybe consult the Czech National Bank if they need to transfer the tokens to each
yes,
other.
that's true.
Yeah, some of
That is
these
true.
biggest Bitcoin seizures by governments have been from essentially the Chinese mainland. The UK as well here too. They just put someone behind bars for the biggest Bitcoin seizure ever, which was the result of a Chinese Ponzi scheme. So the biggest government seizures in the UK and the US eventually make their way back to the mainland.
I don't know when or if we'll get more detail on this. Presumably, because the indictment is also mostly, I think, to justify what the U.S. is calling a seizure from international criminals. But if this person is, Chen Shi is never found or apprehended by the United States, then there may not be additional court documents anytime soon, right? Maybe it's gonna be, it'd be fascinating if, like, the Chinese government were to file in the U.S. and because I think with forfeited property or seized assets, there are these there's this process, a claims process, and this is an interesting one with a lot of money at stake and geopolitical implications. So we will keep following it.
Be quite the budget neutral addition to the Bitcoin reserve.
It does raise that moral hazard, right? Like, if the government is incentivized to seize and steal Bitcoin in order to build its own coffers, that could have negative externalities. To me, it sounds like this was either captured by an offshore mining industry. I'm not saying just because it's a miner in China is it illegal, but if it was seized by the Prince Group, pig butchering, awful. Forced labor compounds. I don't know much about these guys, but just saying, like, I wouldn't feel too bad about them being, dispossessed of their Bitcoin. But it is that interesting question. This is budget neutral. So anyway, part of the long ongoing story of governments and Bitcoin. Last big story, let's talk about yield basis. I have no idea what this is, but I'm told by the gents on this show that it is important. The Curve founder has the Curve, the large and sort of the most important on-chain money market for stablecoins. The founder of Curve has introduced a new protocol that lets you leverage your LP positions on Curve. So if you're providing liquidity to Curve, you can double borrow off your receipt token. What is this?
So yield basis lets you get 100% leverage on your Bitcoin, pairing it with their stablecoin Curve USD and depositing it all into Curve. It's one of the few ways you can get this much leverage is protocol to protocol. It's an interesting one. Like Lucas was saying about Uniswap, this is an OG protocol. Notably, next year they're going to reach their last Curve emission. So they're going to reach terminal economics. And so this is a way, Michael, the founder of Curve, to help kind of really get like terminal state economics for Curve working by using yield basis to kind of add on to the protocol. So what it does is it gives you 100% leverage against your Bitcoin, and that puts it in the protocol. And so you're essentially, with this leverage, avoiding the impermanent loss that everyone gets in an LP position. That happens because you're in this constant churn of selling the winner and buying the loser, and the value of LP goes up by the square root of P instead of the actual underlying. This leverage gets rid of that for you, but it comes at a cost. So essentially, they're swapping around. You borrow Curve from the Curve protocol, so you're hoping that your swap fees are greater than the borrowing fees. But this is where it gets a little bit interesting. That yield basis is started by Michael from Curve, and Curve is started by Michael as well too. So it's a little bit of, hey, how you doing? Good deal. But it's also a very, very efficient LP thing in looking at it. So they've been making roughly about 50% of Curve's actual swap fees. And they've got, versus Curve's 2 billion TVL, they got 150 million. So they're roughly like, 5 to 10 times more efficient LPs on like a dollar for dollar basis than being in Curve. And they're also, they got a current cap. So they're talking about doubling or tripling the market, the size of the vaults. So this could be the lion's share of Curve's revenue going forward, just really providing a lot of liquidity on the stable coin and hoping it'll be a good routing pair. So it should be pretty interesting here, kind of like as Curve, I believe it's next April, gets the end of its emissions. It's not going to be inflationary versus Uniswap's now deflationary economics, and what folks actually think about on like a proper APY basis when you take out kind of the tokenomics gains and hoping on a price appreciation of a token with 40% inflation. So it's an interesting protocol, but it's an interesting way that folks are keeping kind of these terminal economics for these older OG protocols going, even as they kind of reach their initially planned end game.
It's also part of a broader theme we're seeing across all projects where they're using stable coins and issuing them themselves as a way of returning economics to the protocol, right? So Mega ETH famously is going to launch with USDM, where they're going to return that value to validators. Hyperliquid, we wrote about this, launched USDH, but we're starting to see protocols say like, oh great, like actually stable coins are awesome and there's ways that we can earn money from them, so let's not rely on Circle and Tether and let's issue this stuff ourselves and figure out how to earn revenue off it. I do have a question to that, which is just like, is this a fundamentally new primitive, or is this something that we have seen kind of in action before?
It's not fundamentally new. It's just that it hasn't really taken off a lot. I mean, this amount of leverage you really don't see other than protocol to protocol. I mean, you can't get one-to-one collateralized or under collateralized as an individual. There's just, the hazard doesn't make sense. But we have seen some before. Notably, like Abracadabra has done some, letting you borrow against LP positions. I mean, Curve lets you do a lot of borrowing against LP positions, but really there's not much else out there. There's Revert Finance relating to Uniswap V3 positions, but very few folks have really tackled kind of the pricing dynamics of lending against an LP position, or really just kind of finding the product market fit. So here it works, and it's really well attached to like the core operating of like Curve USD and the liquidation dynamics, and the protocols are really well intertwined, so they can scale well together there. But otherwise, there's been less uptake of these kind of LP borrowing protocols. I think a lot of the time, because of the complexity of it and the fact that we get Michael here on the Curve and the yield basis side help bridge that very easily.
I mean, Aave, maybe it was over the summer or just before then, they made the proposal to Uniswap actually to implement an Uniswap LP token Go facilitator, which kind of looks like the same thing on the back end. I mean, they would probably just have to tweak some parameters, but I mean, if Curve can prove that this works, I could kind of see a scenario where Aave tries to do the same thing through a Go facilitator, and I don't think it would look too dissimilar from what they did with Pendle tokens, where it was like, hey, let's let Euler and whoever else kind of experiment with this stuff, and we'll watch from the sidelines, and then as soon as we see that it works, we can just jump in on it and put the entire TVL of our protocol behind it. And I mean, it worked out very well for them with Pendle tokens, so I could see this working as like a Go facilitator as well, and they're clearly already thinking about it.
No, it's good. It's good to see these big protocols taking up rather than kind of relatively small ones like Abracadabra. It's definitely an interesting competitive space here, especially as yields compress and people go search for more and more yield on their tokens. There's always going to be a search for more leverage, more yield on my yield, and it's going to be an interesting step.
So, is the backend collateral asset like a BTC stable pool, like WBTC, CBBTC?
Yeah, they're all WBTC, CRV, USD. So they all incentivize Curve USD swapping, then increases the Curve USD liquidity. It becomes another, a more efficient pair for other swaps, and that's generally the flywheel proposal from the yield basis side.
Oh yeah, I mean, like the point that I was just trying to get to is like these are like highly correlated borrow asset to lending assets. So when you get a situation like 10-10, like, I mean, there's obviously always risk, but the idea is that these things are highly correlated.
Yeah, and it's got a
So
typical
that like liquidation.
it's got a typical liquidation incentivization scheme as well too. That should keep the markets functioning well. But should is always the operative thing there in DeFi.
Do you know if they use the soft liquidations
Yeah.
that Curve USD uses? Yeah, so it's like not even like a net sell. It's actually, we're just going to take this from the borrower and we're going to stick it in an LP pool to actually make the pool more liquid. That's kind of interesting.
Before we wrap, gentlemen, what are you following this week? Excited about? I don't know, worried about? What are you following? And before you answer, I will say two things. Bitcoin supply has reached 95% of its terminal supply. Yes, 95% of all Bitcoins have been mined. There's only 1.05 million BTC left to be mined. So we're at effectively 19.5 million BTC out of the eventual 21 million, not quite 21 million, but just below 21 million that will ever be mined. So if you're a miner out there, get after it. You only got a little bit left to get. And then one more is that I saw Aave is releasing an app in the App Store to offer up to 9%. Is maybe even before we get to the big questions from you guys for what you're watching, is bringing DeFi yield to the mainstream, to TradFi, to, dare I say, normies, a new trend to be watching? Because it seems like you're going to be able to download an app in the App Store that gets you 9% yield on cash.
Hey, I love it. People loved Celsius. This is a transparent Celsius that is not doing bad things with your money. You can see where the liabilities are. This is nothing but good for the consumer.
We saw it with base apps rolling out, so like that, or you can do swapping as like a DeFi mullet type app. So it makes sense, and it's actually one of the best ways to, I think, get adoption and slowly introduce people to some of the opportunities.
DeFi mullet is fintech in the front and DeFi in the back is the idea. So you think this Aave app is going to be like a wallet, like a DeFi-enabled wallet similar to Base?
I would expect that over time they use this as a way to like give users accessibility to the broader range of product offerings, and this is kind of just the entry point. And probably there's some regulatory clarity and stuff that's limiting them from rolling out the rest of it. But yeah, it seems like the natural path.
All right, what are you guys looking at this week? Hit me with it.
I could go first. Solana is rumored to be issuing a new issuance schedule. So actually, Zach and the rest of the team put forward a great proposal last spring. Ultimately, nothing was approved, but so we should see some exciting stuff on the Solana issuance schedule, ideally this week.
Inflation reduction? Is that what we're talking about?
The specifics are not out. We just had Mert, who's the CEO of Helios and a very influential person in the Solana ecosystem, kind of tweet that there's a new proposal coming this year. But yes, this week. But yes, I would guess it has something to do with reducing inflation. And it's one other interesting thing about this is, some of the biggest advocates, in fact, the people who put forth the proposal to reduce issuance in the spring have actually switched and come out publicly saying they think the issuance schedule should stay where it is. So I expect some heated debate over this.
Nice, and I'm taking a look at with the prediction markets getting more and more regulated and the sports betting markets getting integrated. I'm curious, taking a look at actual node co-location, timing of on-chain bets versus what we're seeing on updates on gambling websites, because there might be some interesting folks that are actually finding faster routes to get bets going on chain as they happen on the field rather than odds being updated on these order books. So going to take an interesting look there. Who knows, maybe 00 will have a nice fast fiber route between the UCLA game and poly market faster than
you're
cost.
Saying, wait, so we'll see. Are you suggesting that people are trading potentially fat? Well, you're going to look at timing to see if people are trading faster when, say, a touchdown is scored or whatever thing might affect a sports betting outcome. If they're able to trade faster on the prediction markets than the sports books are updating the odds, and if so, I'm assuming the implication is that an ARB could emerge for a well connected player, and I mean by network connection.
Yeah, just like Flash Boys 2.0. They're selling a lot of the fiber to 00 now. They got fast fiber routes. You could definitely see Sports Boys 2.0 doing some
Flash Boys 2.0 for sports betting is what you're suggesting. It could be occurring.
We'll see as these all kind of get regulated, but it'll be a little tough to see where it comes from. But we're
very interesting hypothesis. Very interesting. All right, Zach, what are you looking at?
Yeah, the big thing that I was looking out for, Lucas already mentioned with the inflation reduction proposal on Solana. Be curious to see kind of what you're all good, dude. Like what the debate around that whole thing will be this time, because like Lucas said, some parties who were on the let's cut inflation side are now on the other side. So it'll be interesting to see how the cookies crumbled and how people have kind of changed their thinking, because we've had like at least 4 or 5 months to kind of ponder this idea, and a lot has changed just in the market and people's opinions in general. So it'll be good to see that. And then we'll also have our long awaited Q3 lending and leverage report out this week. So just kind of seeing how everything goes with that. And yeah, that's like the big stuff on my end this week.
All right. It's been a great show. Thank you, Zach, Thad, and Lucas. Everyone have a great week. And we will see you next week on Galaxy Grid.